How can you spot cash leaks in your monthly financials? Kindly go watch our videos about profit does not mean cash, about possibilities of being profitable but you still run out of cash. Those two videos will build a good foundation for this particular video. So how can you spot cash leaks in your monthly financials? You're going to compare your net income with the changes in cash. Go get your net income in that particular month and also get your bank statements and look at the bank balances and compare them. Try to see, does the movement in revenue or overall profit match the movement in the cash in the bank statements or in the petty cash, depending on how you code your cash. This is the red flag I will see. If you see that month is profitable but cash has decreased, ask yourself, was accounts receivable corrected or not? Did inventory build up? Debt principal payment, did we pay any debts? Then did we have any owners draws in the period? If none of those, but still you see this decrease in cash, conduct a further investigation, do more inquiries, find out why the net income does not vary with the change in cash. Then look at the review your accounts receivable aging. This happens in a way that you could have hidden and uncollected accounts receivable for some time. If you look at the percentage of your accounts receivable in 60 to 90 days, we usually advise, depending on your business and arrangement with your clients, we usually advise to make this period shorter. Why do we make the accounts receivable cycle shorter? To allow you have cash at hand. And we always advise you to make accounts payable cycle longer. Why? To enable you circle your money within your business before you pay it out. So look at the percentage of your accounts receivable versus the accounts receivable in 60-90 days and see how is it varying with the actual trade. Number two, look at these customers that are paying late. You could have a range of certain days, but there are those that could still be paying late out of the bracket. Another thing you have to look at here is the large balances. Look at, do we have these large balances that we've been paying out, especially for loans? Look at that. What are you looking at here? The red flag you're trying to trace here is if your aging percentage or your aging ratio grows faster than your revenue, that's a problem. You're having cash leaks. So what you're going to do is make sure you clear all those old outstanding invoices that are not cleared. Try to follow up, try to make a decision, a conclusion whether someone is paying or is becoming a bad debtor. Fix all those payment terms. For example, someone was paying after 60 days. Now revise and have a policy where they are paying in shorter than that. For example, 30 or 15 days. Have that. That will help you to facilitate your business. Another thing you have to do here is to emphasize things like faster invoice, following up weekly, and also coming up with things like credit term payments, because they help you to facilitate business. The people are easily convinced to pay if the terms look easier, or even those discounts for prompt payments, to make sure they pay money on time so that you don't run out of cash. Then another thing is look at the inventory trends. Inventory, as we said, silently absorbs cash. So look at how this inventory trend has been month to month. Look at the turnover ratio, the inventory ratio. Look at all these slowing or obsolete stocks that you're having. You could be having a certain stock that has been there for some time. It takes cash, it takes storage. You're literally paying a lot of costs to maintain this particular inventory. So look at those. If inventory increases without matching sales growth, then there is a problem. Why would you increase the inventory when you're not selling it? So look at that. Look at also these frequent stockouts and overlasting or overbuying stocks. Is there something that we've bought so much? Is there something that has overstayed? In so doing, you're simply trying to see what takes cash. the question is, what really takes cash? So fix all those, improve the demand notes, improve that demand forecasting, improve in those areas. So also scan your operating expenses for creep. Like, you may have these expenses that take too much money. For example, transport. You may be paying so much in the transport, and ask yourself, how do we cut off this kind of cost? How do we minimize? Number two, ask yourself, if you're paying a lot of administrative costs, what is this particular cost that takes a lot of, cash, and how do we try to create a balance? There is a topic we shall talk about. I'll drop another video still on this matter. Whenever we are trying to improve sales or manage cash, in cutting costs or just reducing costs may not necessarily be the only solution, or may not even be the right solution for your particular business. That's why we do a lot of customer needs assessment. I may drop a video here and you see it and you try to apply it in your business, but the thing you have to think about is your needs assessment. Assess your business and you find out if this particular solution fits for you. That's why we encourage you to come. We do assessments, and I tell you, for your case, cutting on this cost, it's not gonna work for you. You rather find ways of widening your revenue stream, or you rather downsize on this. So sometimes you see these videos and try to draw conclusions based on videos, and most of the times they don't work for you, and you'll be like, oh, this advice didn't work. No, this is a scenario based. How is your scenario? How does it differ from another person? Because I told you, this is usually general knowledge, but its application depends on which entity. Also look at your payroll efficiency, not just the payroll cost, but just look at how efficient is this payroll. For example, look at the revenue per employee. Who brings in more money, or who takes more money? What are these other additions on the payroll that really take more money and do not really yield? Look at the overtime. Look at the contractor overlaps. You may have a lot of these contractors and taking so much money, but they do a little bit of work, and you may have converted these into employees and they do much more work, and you reduce on the cost. So look at the utilization rates of these employees. So payroll is a very, very, very sensitive area, and whenever you talk about payroll, employees will always feel intimidated or feel turned off. But we are not talking about payroll to cut people's salaries. We are talking about payroll to assess those areas that are not efficient enough, that do not serve your demands in this aspect as a business owner. Also, try to fix your payroll. If your payroll grows faster than revenue, there is a problem. It means you're getting more employees, but you're not making more sales. The question would be, why are you getting these guys? Why are you having these, employees? For example, look at the low billable utilizations and you see who is really not productive, who is really not efficient. Look at the ways of aligning your staffing with the demand. For example, you may need someone over administrative and does a lot of things, but you may get someone just technical who does one thing, and that does not serve the overall purpose. Or you may need someone technical and you get someone administrative, and that still does not serve your purpose. So you're going to look at alignment, you're going to look at pricing, even their salaries, you adjust everything. Another thing is identify these debts and financial drains. What are these hidden cash issues in your business? What is this loan? What are these credit card balances? What are these interest versus principals? Please try to find out all this. At the end of the day, it will help you to spot those cash leaks in your business. Watch for owners' draws and distribution. And usually owners will never come out and say, oh, I use this for personal use, I use this. If it is a credit card, we just see personal expenses running through. So you'll be asking yourself, okay, what is this? That's why at some point I dropped a video and I said it is prudent and important to pay a business owner salary. Look for that video. Why a business owner should earn a salary. It will help us to reduce on such instances. Thank you so much. CPA Joviana Kaima.